Hi there, good morning. You're watching Market Cafe on ET Now, and well, we have Shreyansi back on the show.
Well, yes, absolutely, and it looks like a good morning because Wall Street is coming off a weekly high, and that's what we're looking at for S&P 500, isn't it?
Absolutely, and not only S&P 500. In fact, good moves coming in from S&P 500, like she mentioned. But of course, you have Dow and Nasdaq also in focus. Let's talk a little bit about the US markets then. And of course, stock futures are looking promising as of now. Not doing much, rather flat, but in the green nonetheless. But let's take a look at what the week that went by looked like for the US markets. On Friday, Dow closed at 46.59, up 0.2%. S&P 500 as well, 0.2% higher. Nasdaq also 0.2% higher. So lots are happening on Wall Street as well. And as you know, stocks are coming off a winning week amid a volatile stretch for equities. Now, the broad rally, which is your S&P 500, rallied 3.9%, almost 4% to gain its best week since 2023. Nasdaq and Dow added 5.2 and 3% respectively. So, good moves coming in on Wall Street, rather positive. But this was the last week that went by in August. But if you recall, the week before that has been rather tumultuous coming in for Wall Street, and we also did see the impact coming in for us as well. In fact, because of how well these markets have closed off, you can see the GIFT Nifty also indicating a rather positive start for us, 0.3% higher on that front as well. So looking good as of now. And you also had a lot of good news coming in for the US markets over the last week. Retail sales numbers look promising. Initial jobless claims had improved compared to the weeks that we saw earlier, and results from Walmart also turned out to be pretty well. But remember, last week's rally also came off after August started on a rather turbulent front. You had disappointing recession data coming in. The world was speculating if the Fed is rather behind the curve when it comes to its rate cuts, but you also have some optimistic commentary coming out of the Fed members and the FOMC members. So that is something that has cooled off the tensions on Wall Street as well. And remember, 5th August, you had S&P on record for its worst day since 2022, and just on Friday you had S&P that has done phenomenally well for itself. And you also have the 12-month inflation rate, right? The CPI that came in last week, that came at 2.9%, very close to the Fed's 2% target, and the street cheered this on, and it was overall a good week coming in for Wall Street last week. Now, what lies ahead for Wall Street this week is comments coming in from Fed Reserve Chair, that is Jerome Powell, at the Jackson Hole Symposium in Wyoming. This is going to be a very important event to watch out for, because you also have ECB leaders coming there and speaking. Lots of global commentary expected on this front as well. And you also have minutes of the Fed Reserve's meeting today that will be released today. And the Democratic National Convention will also be kicking off today. So lots happening in the US, and all of this is going to see a spillover effect on Wall Street as well. And from the earnings front, while we have wrapped it up in the Indian markets on the earnings front, you also have some earnings coming in from the US today. You have Palo Alto Networks as well as Estee Lauder coming out with their earnings. So while that is on the US front, let's also shift focus, take a look at what European market did on Friday, and rather mixed, but not much to worry about, because you had DAX that was holding on strong, 0.8% higher. FTSE, however, rather subdued, 0.5% lower. Stock 600 also 0.3% higher is where it closed. So overall looking good, and well, let's just see how this pans over for our markets, because the Wall Street looks rather positive as of now.
Well, absolutely, Snehi, and there's a lot to watch out for when we take a look at crude oil as well as gold. But first, let's take a look at US crude oil futures. Fell more than 1% on Friday amid reports that Qatar told Iran to not attack Israel while Gaza ceasefire talks are ongoing. Now, Qatar's Prime Minister told Iran's leaders in a phone call after the first day of Gaza ceasefire talks in Doha that they should de-escalate, warning of the consequences of attacking Israel when progress is being made in the negotiations. When you take a look at price movements, then you're looking at WTI around those $76 per barrel levels, so a downtick of about 1.9% coming in for that one. And year to date, US crude oil has gained 6.9% as well. So those are the kind of moves that you see for that contract. Let's also take a quick look at Brent September contract. Then that was around those $79 per barrel levels, and when you take a look at that as well, you're looking at a downtick of about 1.6% there as well, and the trend is continuing there as well, because you do see that year to date that contract also is ahead 3.4%. Now when you take a look at the weekly movements that you had for these contracts, quite the interesting picture that we're seeing being painted there as well, because the US benchmark ended the week down slightly. So a downtick rather coming in of about 0.3% for US benchmark. And when you take a look at Brent, marginally gained, so marginal gains coming in on a weekly basis. And those are the kind of moves that we saw in terms of the week gone by. Now prices have subsequently pulled back as an result has not yet materialized, and that is something that the market is looking at, and worries about softening oil demand is also something that the market is keeping a very close eye on when it comes to China, because that is something that has weighed on prices as well, with OPEC lowering its forecast for 2024. So that is largely what is being penciled in for the rest of this year as well. And when you take a look at gold prices, though, on the flip side, you do have gold prices that soared to an all-time high as the dollar weakened on growing expectations for an interest rate cut from the Federal Reserve in September. So those are the kind of moves that you saw coming in for gold prices. And in terms of price movements, then you did have spot gold that was up about 1.5%, and that was after hitting that record high around those $2,500 per ounce levels. So that largely is the handover coming in when we take a look at both oil as well as gold, Snehi.
Absolutely, lots happening on both of those fronts. Let's also shift focus, take a look at all the important cues to watch out for in today's trade. And while not much is happening back home in terms of macroeconomic data, you also have some important data trickling out from the US. You have the consumer board leading index coming out of the US, so watch out for that. From China then, very important, you have the FDI data coming out, so keep a close eye on that as well. Let's shift focus back home, talk about some corporate action expected today. Two companies in focus on the back of their boards meeting to mull fundraising plans, and that's Brokerage estate developers as well as high-tech pipes. It's also the record date for the Chamanlal Sethia exports share buyback today, so watch out for that as well. It's also the last day to buy the shares of a couple of counters, the likes of Man Infracon, Chamanlal Sethia and Reliance. Keep that in mind as well. Last day to buy the shares of all of these companies to be eligible for their dividend. And in terms of the primary markets, you also have one IPO that opens for subscription today, and that is the Interarch Building Products. This IPO will be opening today, and lock-in period is also ending for two companies today. Entero Healthcare, 51% equity coming out of lock-in. You have Go Digit General Insurance, 2% equity coming out of lock-in. Now, in terms of other news, some important developments to be focusing on back home. You have FM Nirmala Sitharaman. She is going to be holding a meeting to review the performance of private sector banks today. Remember, PSU banks over the last couple of weeks have not done very well and was the top loser in trade on a weekly basis last week. So watch out for any announcements on this front, any measures that have been taken. And from the US, the Democratic National Convention begins, and you have Fed Chairman Fed member Christopher Waller also all set to speak. So watch out for any commentary on that front as well.
Well, absolutely, and all eyes will definitely be on the Federal Reserve Chairman Jerome Powell, who will be stepping into the spotlight at the Kansas City Fed's Jackson Hole Symposium. Now, in his keynote address, the central bank chair is expected to bring in clarity for the street in terms of what lies ahead when it comes to interest rates, even as economists are pricing in a 25 basis point cut in the September FOMC meet. Select projections are looking at a larger cut on the lines of a 50 basis point adjustment as well.
All right, let's keep it going with a commentary coming in from the US. You have Fed Reserve Bank of Chicago President Austin Goolsbee. He said that the US credit conditions are tight and are getting tighter, and that while there's no certainty the central bank will cut rates next month, as is widely expected, not doing so could hurt the job market. While economic data is a mix of positive indicators and some that are more concerning, he said that if policy is kept too tight for too long, employment on the Fed's mandate could become a pain point. Additionally, he also warned against misrepresenting the inflationary impacts of corporate price hikes and tariffs, but steered away from directly speaking on the presidential race. But his comments come during an election cycle in which voters have consistently ranked the economy and the high cost of living as their top priorities.
Meanwhile, the San Francisco Federal Reserve Bank President Mary Daly said it is time to consider adjusting borrowing costs from their current range of 5.25 to 5.5%. She also alluded to the fact that the strategy to gradually ease policy is prudent, also adding that the labor market amid signs of slowing was still not weak.
All right, let's talk about some company updates coming in. You have global payments giant MasterCard is reportedly planning to cut its global workforce by 3%. The 3% figure would amount to about 1,000 people, and the majority of the job cut notifications are expected to be completed before the 30th of September. The purchased New York-based company employed about 33,400 people globally at the end of last year, with approximately 67% located outside of the United States in more than 80 countries.
Alright then, a little something for the movie buffs out there. Disney's Deadpool and Wolverine has shattered records, becoming the highest grossing R-rated film of all time. With almost $2 billion globally, it surpasses Warner Brothers' Joker. This Marvel blockbuster proves the franchise can tackle dark content without alienating audiences.
Well, let's shift focus, and as the festive season approaches, many travelers are noticing sudden price hikes when booking flights. But are airlines using more than just demand and supply to set these fares? With artificial intelligence and data tracking at play, your browsing habits, search frequency, and even the device you use could be influencing the ticket price you pay. We dive into how airlines may be leveraging your personal data to drive up fares and what you can do to avoid paying more. It's a very interesting set of information coming in. Let's go across and listen in.
As the festive season kicks off with Raksha Bandhan and continues until Diwali, air travel is experiencing a surge as travelers search for flight options. Many believe airlines use personal data such as login information, travel details, and passenger numbers to inflate airfares. A recent local circle study found that 72% of consumers have noticed higher fares when searching multiple times on airline apps or websites. Consumers also report that airlines may use manipulative tactics known as dark patterns to lead them into paying more. AI is playing a role in this by analyzing user data like travel history and preferences, allowing airlines to adjust prices based on a customer's willingness to pay.
The customer feels that the data that is provided, data of origin, login details, passwords, usernames, destination dates, and number of passengers, etc. All these things are recorded by the airline and used to increase the prices which are not in favor of the customer.
Airline companies claim ticket prices fluctuate due to inventory updates, technical glitches, and approaching departure dates. However, airlines also use cookies, session cookies during a search, and persistent cookies that stay in your browser. These cookies can feed data back to airlines, potentially impacting prices. Experts recommend using a desktop and meta search engines like Google Flights, Kayak, or Skyscanner to compare prices without sharing personal data. Check prices at different times, plan early, and use incognito mode or clear cookies to avoid tracking. Creating new IDs for booking and considering travel agents can also help you find better deals. Avoid booking through mobile as it stores your data and may lead to price hikes.
You can sit on a desktop computer with some windows where you have not searched anything before. So if you can do this, possibly you can get a best price. Or you can use certain apps which claim to be the price to be lower. So you can use certain apps where the surge, you wouldn't see that much amount of surge.
Companies are increasingly using AI to study consumer behavior and psychology, fine-tuning pricing strategies based on the data. The device, browser, and how often you search can all impact the fares you see. It's crucial for consumers to be aware of these factors when booking, as avoiding price manipulation is becoming more challenging for travelers. Anurag Shah, ET Now, Mumbai.
Alright, then that's quite the interesting take coming in there. So something to take note of, Snehi. I'm going to take that list home and make sure that I look at it when I book a flight. But for now, it's time for a quick break. When we come back, we'll take a look at how the Asian markets are faring, so you don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the Asian markets as promised. And Asia Pacific markets opened lower after the week that saw a broad rally in stocks. Now, traders in Asia will be watching out for central bank releases this week, including the Bank of Korea's rate decision as well as the minutes of the Reserve Bank of Australia's August meeting also. Now, inflation data from Japan and Singapore will also be something that investors will be keeping a very close eye on, while China will be announcing its 1-year as well as 5-year loan prime rates on Tuesday as well. So keep an eye on that this week. Now, Hong Kong's Hang Seng Index is the one that we should look at because that is up over 1% on your screens. Let's also take a quick look at Shanghai, then 0.5% uptick coming in for that one. There on your screens, currently up about 0.6%. Let's also take a look at Australia's ASX 200, marginal uptick coming in there as well. A 0.1% uptick coming in there as well. Let's also take a look at Nikkei that opened lower and is currently down about 0.3%. So that's the kind of handover that we have when it comes to Nikkei. And core machinery orders in Japan fell 1.7% year on year in June, surprising economists who had expected a 1.8% rise. Now, machinery orders are viewed as a proxy for capital expenditure in the country. So, important to take a look at that data set as well. South Korea's Kospi is the one that opened in the red, currently down about 0.4% on your screens. Now, back home, of course, we shut shop around the 24,500 levels thereabout, and currently what is being penciled in terms of us is a positive start, is something that we're penciling in, but really very important to take a look at how that pans out for us, Snehi.
Absolutely, lots to watch out for and indicating a positive start. Hi there, welcome back. Still watching Market Cafe on ET Now. Now, sources tell your channel that the Finance Minister Nirmala Sitharaman is set to conduct a thorough review of the performance of the public sector banks today. Let's go across to my colleague Prakash for the expected agenda of the meet today. Prakash.
The Finance Minister will chair two important meetings today, and the first one is with the heads of the public sector banks, where comprehensive performance review will be done based on various parameters. Sources are informing that the 6 key parameters have been decided for the meeting, and the first one is with regard to performance review on deposit growth, credit to deposit ratio and asset quality of the public sector banks. Along with that, the Finance Minister will also take stock on current status of accounts acquired or being acquired by NARCL. In addition to that, status of action taken report will be sought from PSBs on various issues. We are given to understand that the performance under various flagship schemes such as PM Awas Yojana, PM Surya Ghar Yojana, PM Vishwakarma Yojana will be reviewed in terms of credit growth. When it comes to digital infrastructure, especially digital payments, we are given to understand that the digital payments, issuance of Viksit Bharat card will be reviewed prominently by the Finance Minister. Last but not the least, cybersecurity, one of the important agenda. It is expected that the Finance Minister will seek action taken report from the public sector banks on the instructions issued in previous meetings, considering various factors into account in order to protect the interest of the customers. Now, coming on to second important meeting of the day, which is going to happen with the regional rural banks, we are given to understand that the 7 key parameters have been decided for the comprehensive performance review of the regional rural banks, and these are performance on key financial parameters, ground level credit for agriculture, status of technology upgradation, initiatives for MSMEs, also performance under government schemes, recent government intervention, pending issues and way forward are there on agenda for discussion.
All right, thanks Prakash for that update coming in. Moving on, then the Reserve Bank of India has tightened norms for the NBFC P2P peer-to-peer lending platforms to improve transparency as well as compliance. My colleague Ankur Mishra is standing by with more details. Ankur, tell us a little more about these guidelines then.
Yes, Reserve Bank of India has tightened peer-to-peer lending norms. Now, this is done after there was flouting of norms by several of the companies, and after this was observed by the regulator, new norms has been released. Now, as far as new directions which has come from Reserve Bank of India, there should not be any credit risk borne by P2P lending platforms. That means that if there is any loss of principal or interest by the borrower, that cannot be borne by the platform, but it should be borne by the lender itself. Apart from that, there is also a specification that this should not be promoted as an investment opportunities like liquidity options. That should not be the promotions that are done by P2P lending platform, and it should be pure business. Apart from that, there is also a direction given by Reserve Bank of India that the overall limit stands at rupees 50 lakhs. So all in all, new norms have been released because there were some discrepancies which was found by the regulator, and now by adhering to new norms, the expectation is that the lending should be done in letter as well as spirit by the P2P lenders.
All right, Ankur, thanks so much for taking us through that. But we're getting word about a new IPO that's about to hit D Street, and that is going to be JSW Cement, because that company has filed its draft to launch its IPO to raise as much as 4,000 crore rupees. Now, some of the book running lead managers of the IPO are GM Financial, Axis Capital, Citigroup, and a lot more. Ashesha is here with more details about this IPO, the amount they're looking to raise. Ashesha, take us through all of that.
JSW Group company JSW Cement is all set to list on the bourses soon. It is looking to raise about 4,000 crores, out of which 2,000 crores will be OFS and the balance will be fresh issue. Now, out of the 2,000 crores that it is looking to raise as a part of fresh issue, about 800 crores will be utilized for setting up a new cement manufacturing unit in Maharashtra. About 720 crores will be utilized for repayment of debt, and the balance will be for general corporate purpose. Now, as far as the selling shareholders are concerned in the OFS, AP Asia Opportunistic Holdings holds about 9.1% stake in the company, which is looking to sell stake worth about 938 odd crores. Synergy Metals Investment is also looking to sell its stake, and SBI, which holds about 1.21% stake currently, is also looking to pare down its stake in the company. As far as capacity expansion plans are concerned, remember, company is aggressively looking to expand its capacity. So it is looking to increase its installed grinding capacity from about 20.6 mmTPA to about 40.85 mmTPA, and installed clinker capacity is also all set to increase to about 13.04 mmTPA. Remember, this is the 6th largest company in terms of capacity after Ultratech, Adani Group company, Shree Cement, Dalmia Bharat, and Nuvoco Vistas. So yes, a big major IPO coming up in the cement industry after a gap of almost 3 years. It is all set to hit the bourses soon.
Absolutely, Ashesha. It's all set to hit the bourses. Thank you so much for that update coming in. And it's definitely an IPO that we'll all be keeping an eye on along with the street. But it's time for a quick break. When we come back, we'll take a look at some more stock-specific news, so you don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, we have my colleague Anshu standing by with the futures and options roundup. And what is it shaping up like?
Yes. Let's start with what FIS did in the previous session. So in index future, we are seeing that they added around 18,500 longs. They covered some short as well of around 16,000 contracts. So net to net, we are seeing addition of 34,800 contracts, due to which the total long position, which was below 50%, is back above that 50% at around 50.4%. So they are net long currently. Also, if you see the net position in index future, earlier it was decreasing. If you see the 5-session trend, it was around 22,000, then 15,000, then it moved negative, and then it moved down to minus 30,000. Now it seems to be coming back. So we may see some U-shaped recovery in index future, which is positive for the market. Now, if we talk about index, the Nifty has given a good breakout from that consolidation pattern of 24,400 and 24,000. So we may expect some good positivity in the market till we stay above that key level of 24,400. Also in index option, we are seeing some put writing happening at 24,500, indicating option traders are expecting some good support around this level. Whereas if we talk about Nifty Bank, then Nifty Bank is still in that consolidation phase, but it has given a good bounce from that 100 DMA, which is still a positive sign. But we have to give a breakout from that upper range of around 50,700 mark decisively to be positive on banking stocks as well. Now, if we talk about index future, we are seeing open interest declining by 13%, which indicates short covering, which is again a positive sign for the market. Whereas if we talk about F&O stocks that are in focus, then we are seeing significant long build-up happening in Ashok Leyland, Glenmark Pharma, and HCL Tech, whereas short build-up for Voltas. So keep an eye on the stocks.
Yeah, Ranj, thanks for taking us through that list of levels to watch out for as well as stocks. But while we're talking about stocks, let me also bring in my colleague Ria, who's summed up a list of all the stocks that could be potential buzzers in today's trade. Ria, take us through what to watch out for today.
Yes, so let's take a look at the stocks that are going to be in focus today. Now, first up, we have two major order wins coming in. Firstly, DCX Systems has received an order worth rupees 107 crores from domestic and overseas customers for the supply of electronic kits and cable and wire harness assemblies. And also, Genus Power Infrastructures has won orders worth rupees 2,925 crores for the appointment of advanced metering infrastructure service providers. Moving on though to Kaplan Point Labs, now the injectables plant in Tamil Nadu has received 0 observations from Brazil's Anvisa. Let's also talk about some fundraise activity that's going on. So Adani Enterprises has amended their fundraise prospectus to raise up to rupees 1200 crores via NCDs, and KPI Green Energy has completed a rupees 1000 crore QIP fundraise, and the likes of Morgan Stanley and BofA Securities has participated in the QIP. Lastly, we have Escorts Kubota. So the company has said that they continue to explore various options for industrial land for setting up a greenfield facility, for which an investment intent has been submitted to the government of UP. Now the estimated investment for this plant is going to be approximately rupees 4,500 crores, which is to be done in phases, and the annual production revenue or generation of the plant will be over rupees 10,000 crores at full capacity.
For that update coming in, but Interach Building Products is also all set to hit the D Street, and this subscription will remain open until August 21st as well. The engineering company has also fixed its price band at 850 to 900 rupees per equity share. So tell us a little more about that as well then.
Yes, so the IPO for Interach opens for subscription today, and the total IPO size is going to be around 600 crores with a fresh issue of rupees 200 crores, and the OFS portion is going to be rupees 400 crores. Now the tentative listing date is on the 26th of August, next Monday, and as you said, the price band is set at rupees 850 to rupees 900 per share. Now also let's also take a look at the fundamentals of the company. So Interach Building Limited provides turnkey pre-engineered steel construction solutions in India, and the company offers integrated facilities for design, engineering, manufacturing and on-site project management for the installation and erection of pre-engineered steel buildings or PEBs. Now as of March 31st, 2023, the company had the second highest installed capacity in India of 1,41,000 MTPA, and the company also had a 6.1% market share in FY23 and operating income among the integrated PEB players in India. Now the company's industrial manufacturing or construction category includes customers like Grasim Industries, Berger Paints, Blue Star, Timken India and Adverb Technologies. Now if you take a look at the fundamentals of the company, those are also looking quite strong. They have a 3-year revenue CAGR of almost 16% and a 3-year net profit CAGR of almost 71%. Now the IPO proceeds are going to be used largely towards capex for setting up a new PEB manufacturing plant and also towards upgrading the existing manufacturing facilities. Further, they're also going to use the IPO proceeds to invest in the IT assets and to fund the incremental working capital requirements of the company.
Yeah, thanks for taking us through that. So all eyes are going to be on this IPO that opens for subscription today. But let's shift focus from that and talk about two companies that will be in focus today, and that is NMDC as well as Voltas. Let's take a look at the con call takeaways from both of these companies, because both of them held their con calls and they've cited business guidance and also current business updates. So my colleague Vinny is here with all the key highlights from those con calls. Vinny.
So absolutely, both these stocks are going to be in focus, Voltas as well as NMDC. Now, Voltas, in terms of the key takeaways from the con call, unitary cooling products, that's the AC side, the company said that they have continued to gain market share. 50 basis point on a sequential basis is what their market share has risen by. 19.5% in the UCP segment is what their market share is at. And versus the second player, it's a 450 basis point gap between the first player, that's Voltas, and the second player. So yes, they're comfortably above in terms of the market share that they have. They're aiming, a high single-digit margin in the segment over the long term. They've started production in the Chennai RAC factory also, where they have a significant amount of units that they will be making there, as well as the water dispenser line that is there. So yes, that's something that is a positive. And the EMPS segment also, they are confident that they will see a pickup in terms of orders in the second half of FY25. Voltas Baker, they are achieving and planning to achieve the EBITDA break-even in the near future. Capex plan of around 500 to 550 crores in FY25. NMDC, this is coming in the con call, the significant highlight that came in, especially in the front of the update from the Supreme Court in terms of the ruling, where NMDC being a merchant miner, the management has guided that the cess would be just very negligible in terms of the impact and will be passed on to the customers, so not much of an impact coming in for the company. The management maintained their volume guidance in FY25 at 50 metric tons. They've guided realization that would dip to INR, that's 1,000 rupees per ton, and in Q2 FY25 to 4,304 rupees from the previous. So 1,000 rupees reduction in Q2 FY25 in the realization is what one is expecting. Capex guidance for FY25 2,200 crores, as well as NMDC Steel management is hopeful of achieving break even by the end of the year. So yes, keeping an eye out of that. They've also filed a review petition with the Supreme Court towards the amount receivable from the Karnataka monitoring committee, so keeping an eye out on that.
Absolutely, Winnie. Thank you so much for taking us through those key takeaways. Moving on, then, any uptick in share prices of Indian steel stocks is an opportunity to exit, and that's the word coming in from CLSA in its latest note. Let's get in Ashesha to understand their rationale then. Ashesha?
Well, absolutely. India has initiated anti-dumping duty, or rather investigation on anti-dumping duty on imports from Vietnam. But CLSA believes that this is unlikely to be a game changer, and that is because Vietnam accounts for less than 10% of India's total steel imports. So CLSA believes that the impact of the anti-dumping duty, if at all it were to be announced, will also be limited. They say domestic steel prices currently trade at about 8% premium as compared to parity, and duties will have to be substantial to move the needle as far as domestic steel prices are concerned. They also say that current prices of steel stocks imply sharp increase in profitability over the coming couple of quarters, but this looks unlikely as profitability of steel stocks is not likely to improve sharply going forward. As far as their stance on the sector is concerned, they are maintaining their underperformed stance on the sector, and they say that any uptick in steel stock prices will be an opportunity to exit from the sector. So a negative report that has come in, where they believe that if at all anti-dumping duty were to be imposed on steel sector or imports from Vietnam, that will not have any major positive impact on the sector.
All right, Ashesha, thank you so much for taking us through that. So the steel sector and the stocks falling in that sector are going to be in focus. But with that, let's shift focus, take a look at what the brokerages are flagging off for us this morning. First up, you have a note coming in on Aurobindo Pharma from HSBC this morning. They've maintained a buy rating with a target price of 1,625 rupees per share. The FDA had issued a warning letter to their UGR3 plant, so they've also taken note of that. The plant status is already classified as OAI, which is the official action indicated, and they see low risk of an FDA import alert for the plant, and they believe that the FDA remains focused on ensuring supplies to the US. Not seeing much impact, maintained a buy rating with a target price of 1,625 for that stock. Moving on, let's also talk about Shriram Finance, because we also have an HSBC note coming in on this company as well. Maintained a buy rating, hiked the target price from 3,340 rupees to now at 3,600, so quite a significant hike coming in. They believe that the company is competitively well positioned among the entire NBFC space. It's seen the most convincing operating period in over a decade, and this is thanks to the strategic clarity as well as the healthy metrics that the company has reported, and they see option value of a credit rating upgrade for this company as well. So very positive note coming in on this front as well. Let's also focus on Glenmark Pharma this morning, because we also have a Motilal Oswal note coming in. They've upgraded the stock to a buy from a neutral rating and hiked the target price significantly at 1,850 rupees per share compared to just 1,200 rupees earlier. They believe that there are growth levers across key markets for this company, and they also believe it's gearing up for a consistent turnaround in its overall performance as well. For domestic formulations, they've remodeled distribution, in licensing, and the new launches will be aiding growth. For the US markets, they've addressed regulatory issues, and the niche pipeline that the company has is valuable for the growth trajectory as well. For the European Union, market share gains and expansion in new geographies will be driving growth, and for the rest of the world, there's a robust performance that's being seen across regions for Glenmark Pharma. So very bullish brokerage note coming in from Motilal on Glenmark Pharma as well. But Shreyansi, what are you spotting?
Well, absolutely. Keeping it going with bullish then, because you do have Entero Health and Jefferies coming out with a note where they're maintaining a buy with a target price of 1,510. They're talking about an inline Q1. They're talking about how recent acquisitions will be reflecting from Q3 as well. When it comes to their guidance, they're maintaining their financial year 25 revenue growth guidance of 35 to 40% then. Let's also take a quick look at Voltas, because Jefferies has also come out with a note on that one. They're talking about how there's a strong quarter for ACs coming in when it comes to Voltas. They're also penciling in a revival in margins to 7.5% by financial year 26. So that is something that Jefferies is also talking about when it comes to Voltas. And they're also talking about how the management also expects high single-digit margins, and that is something that they're highlighting as well. On to what Nomura had to say about Voltas then. Strong Q1 board by profitability in the project business is something that they're highlighting, along with the growth outlook that remains strong according to them. Margin tailwinds is something that they see currently in place, and they do remain cautious on new orders though. So that's the word coming in from Nomura when it comes to Voltas. Let's also lastly take a look at Sunteck Realty, because Jefferies has come out with a note. They're quite bullish on the counter. They're maintaining a buy rating, target price at 690 rupees from 565 rupees. And that's the hike that we've seen in terms of the target price. And they're also talking about good operations as well as large project boosts. So that is something that they're highlighting, along with the strong pre-sales performance as well as a good financial year 26 launch pipeline that Jefferies has highlighted when it comes to Sunteck Realty. So that largely is the roundup when it comes to brokerages.
All right, so that's all the stocks that brokers are flagging off for us this morning. Largely very bullish notes coming in. But on that note, I'm afraid it's a wrap on this edition of Market Cafe. From Shan, Simi and the entire team that put this show together, thanks so much for watching. But you don't go anywhere, because the market takes all the action forward.
If you like this video, then like, share and subscribe to ET Now.